Today was kind of a tough one. I know a lot of traders struggled. I'm in a couple different discords like TopStep, Fast Track Trading, and Apex, and I've seen a lot of people talk about blowing accounts and taking huge losses and over trading. And I just wanted to talk about like patterns and trends that I've seen that could potentially help you avoid making these same mistakes. So as you can see, the very first 5-minute candle of the market was just an absolute downward, just nothing but pure selling. And we start to see that in this area where we had a couple top wicks last Thursday, we started to get some support today. So they were kind of defending these key areas, which is why I always recommend plotting like some weekly levels, whether it's on the low for like some support or on the high for some resistance. It gives you a good idea of where the market might move to, or where it could potentially bounce or stop the momentum from going up. So I did not trade in the first couple hours of the market because currently I have TopStepX evaluations. I have 5 150K accounts that I'm working through right now. I'm currently at right around 155,000, I believe, in each of those. So hopefully I can get those 5 accounts to an express funded level this week with all the volatility that we're going to have with the FOMC. I'm assuming there's going to be some really awesome momentum plays coming up. But fast track trading, they were having some rhythmic issues again this morning. They're still working on rolling out their private server. So definitely excited for them to get that rolled out. So I did not want to trade in the morning where I know there's a lot of volatility and a lot of traders having issues. So I did not trade until here. And the reason why I took this trade today is because a current pattern that I've seen is on downtrending days, we hold below the 50 moving average on the 5-minute chart. So as you can see, I know a lot of people don't like exponential moving averages, and I'm not saying you have to use this. This is just a pattern that I've seen. Every time we come up to it on a downtrending day, we reject off of it. We came back up to it, rejected off of it. And to me, I don't believe in coincidences. Like, I guess you can plot random lines on the chart at any point and make sense of it sometimes, but I don't know. We just get a rejection, we come back up, we get a rejection. So what I did is I took a short in this area expecting us to reject and head back down toward previous lows. Thankfully, when I did get in, we got to move in the direction that I thought. However, I used a trailing stop to lock in those profits because as you can see, we bounce immediately and the buyers start to come in and we have a little bit of a push toward the high of day or like that opening range right after I exited my position. Now, usually, if you get a good switch in momentum throughout the day, you can get in as it holds the 50. So if we rejected the 50 EMA all day and then eventually get over it and hold it, you can typically get a pretty good move to the upside. And what did we see? The whole rest of the day, we did not get back below the 50 EMA. So if you would have got in, you could have rode it almost to the high of day and basically didn't have any worry as you rode that profit all the way up. Now, as always, we can get into that live trade. So I enter one NASDAQ contract short here as we hold below this 50 exponential moving average that I mentioned on the 5-minute chart, and sellers started to step in on Bookmap with those large black bubbles, which indicate big sell market orders. As you can see here, I have a target for the low of this candle. I didn't want to risk the market retracing and going back over my entry. I kind of had a feeling that we were going to get whipsawed toward the end of the day, but I just wanted to give the trade enough time to run. And if we would have got, if this candle right here would have made a new high, I would have gotten out. I did contemplate adding to this position, and I kind of wish I did, but I did not want to get too aggressive because I did see that we still had some levels of liquidity up toward that 19,450 area. And then I place my stop below break even, and then I trail it all the way down as it moves. I try to give the trade a little bit of space just so we can continue to catch the downtrend here. Sellers keep coming in. This looks good to keep holding. Just kind of try to be patient. I know it's very easy to just immediately see profit, take profit, but I like to really kind of trail it. And then I saw like some buyers started stepping in here toward this previous bottom wick, and 2 bottom wicks, like strong bottom wicks like this in the 5-minute, can be a really good indicator that there's some upside to come, because buyers are coming in right there even after all that heavy selling and bringing the price all the way back up. And this actually also kind of presents a really good opportunity. And when you're able to read the like candlesticks and understand like how volume works and the momentum, you can kind of see that there was strong buying support holding above this 9 EMA. As you can see here, no candle was able to close below the 9 EMA, indicating that buyers are still present and we are more likely to go up than we are down. And another benefit of using fast track trading is the free Bookmap that you get. And Bookmap can kind of show you new levels of liquidity that are likely to act as a magnet toward price action. And as you see here, 19,445 had some more liquidity added. And what do we do by the end of the day? We touched that level. As always, nothing is 100% guaranteed, but this happens more likely than not. If you see a big level of liquidity added after a big buy up and the level of liquidity is higher, it is very likely that that area will at least be touched, typically at some point before the end of the day. Now, obviously this week we got FOMC with the rate decision on Wednesday, so trade safe, trade small, be careful. A lot of traders will blow up their accounts this week. Don't become that trader. Let's be consistent, let's be smart, and let's get to those payouts. If you have any questions, drop them below in the comments. I'm going to continue to go over key patterns that I'm seeing, key news that is going to come out, and then just current overall market trends that are allowing me to get in and execute trades.